Sports teams, almost everything is a deductible expense, even their employee salaries. He made almost $700 million. The tax percentage that he paid, 12%. Actually lower than you.
I guess he had some connection with the IRS or something, like most billionaires might do. Every single one of these billionaires are doing this.
You're not understanding the percentage. Like, that's the most important part.
The guy's making 15,000 times more than the average person. You pay a bit more in taxes, they're gonna hurt your ass. At the end of the day, they don't give a shit about you. They just care about what their wealth is.
You're fostering greed.
Welcome back to another episode of the Generation Hustle Podcast, a show that explores the world of business, entrepreneurship, and culture, all centered around the millennial. I'm your co-host Sherson, alongside my good friend Amin, and this week we're exploring the business of sports. Episode 53 is about money in sports. More specifically, everyone's favorite word, taxes. When we look at money in sports, it's easy to get fixated on the glamorous life of athletes, player contracts, sponsorship deals, and overall the lifestyles of these individuals. However, when we take a step back, the owners behind many of these teams and franchises tend to be the big fish that remain hidden. So this episode will uncover some of the secrets employed by these owners, and will use details from the analysis performed by a Propublica article titled The Billionaire Playbook: How Sports Owners Use Their Teams to Avoid Millions in Taxes. So let's get right into it.
Another little fun, little shocking truth episode here for all our listeners.
Just to depress us even more, right? Or just educate us even more, however you want to see it. But man, it's an interesting topic today. I wanted to ask you a sports analogy or a sports example, right? Obviously, we love our sports teams and we love our owners who are...
What's up?
always on the sidelines and cheering along, but here is the situation, man. You're at a basketball game, right?
Yeah.
Let's say you're at a Lakers-Clippers game, and obviously that's the stars are out for that game. Let's say you work as like the popcorn stand person, I don't know, making $40,000, right?
Yeah.
And so we have LeBron James in the building from the Lakers. We have Steve Ballmer in the building from the Clippers owner. We have all the celebrities in the building. Who do you think out of that list is paying the highest tax rate?
Well, I know the answer now, but I think the normal average person would say the highest player on the court, the paid player on the court, which is likely LeBron, right?
Right.
So people probably think he pays like 50% of his salary in taxes.
Right. Like a crazy number like that, right? And when you actually break it down, just as an example, in 2018, LeBron James reported an income tax rate of 35.9%. It's pretty damn high. So let's say you were working that night as a concession stand person making $40,000. You're paying about a percentage rate of 14.1%. That's your tax rate when you break it down. Now, like you said, Steve Ballmer, dude, this is actually an actual figure. I don't know the year that this was for. I believe this was for 2018, but he made almost $700 million. That was his income. The tax percentage that he paid was 12%. Actually lower than you, or actually lower than the concession stand person.
Yeah, the average person pays about what, 20 to 30% taxes on their income and stuff like that. So it just begins to show you how little the elite actually pay in taxes based off of the income streams that they have and the types of income streams that they have, right? And you just mentioned LeBron made $124 million in 2018, got taxed 35.9%. The Ballmer made $656 million, and he got taxed $78 million, which obviously is a large amount, but proportionally it's only 12%. And it's just dude, what are we doing here? Employees and stuff paying 30-40% tax. Well, it doesn't in America, but in Canada, 30 to 40% of our income in taxes, struggling, and these
that's a huge
elites.
chunk.
These elites are just jamming, it's just 10% taxes, 12% taxes, whatever it is. Such a low amount compared to, the guy's making 15,000 times more than the average person.
Exactly. And that's the issue, right? And obviously I want to get into the specifics of how he pulled this off, but just on a side note, how do you feel about people who don't mind this issue? They'll look at that 78 million that he paid and be like, oh, look at that, he paid almost 100 million in taxes, why are you complaining? It's you're not understanding the percentage. That's the most important part.
Exactly. Proportionally, he's not paying his fair due. Exactly. I would say, right? So whenever we get into this whole topic of like elites paying taxes, then the other side says, oh, they create jobs, they do this, they do that. At the end of the day, they don't give a shit about you. They just care about what their wealth is and how much money they're making and how they can save money. Like same thing with the corporations, as large corporations, they don't give a fuck about paying taxes and helping out the US economy or whatever. They only give a shit about their shareholders, right? So that's why they have all these little tax loopholes in like the Caribbean countries and Ireland and stuff like that. They exist for a reason. They don't give a crap about what they're doing for the US economy. Like Amazon pays $0 in tax essentially. And they're what? I think they're nearly almost $1 trillion company.
I think they pass and then they just keep going up and down.
So it's like near that point, and it's just like, what the fuck, dude? And they basically just use all their losses and other structures and ways to thing, and then coincidingly, all these elites do the same thing.
The Caymans or something like that. Like you can understand it's a tax sheltered situation that they're doing. But I feel like now that people are kind of catching on to these things and it's becoming more mainstream news, they're like, we need to figure out a more complex way of doing this. And so this is kind of brings us to the sports teams, right? So Steve Ballmer is probably the best example here because he was the most recent. And right now the Minnesota Timberwolves are going to be sold too, I believe. I think it's being finalized, but this is the most recent one. I want to say the Los Angeles Clippers, I believe he purchased for $2 billion.
Yeah, it's $2 billion.
And you're the tax expert here, and I'll let you dive in and kind of like how you think about some of those numbers. But essentially, obviously, the biggest thing that we look at when we purchase an asset is the amortization or the depreciation. And so to our listeners, like that is the value of the asset that we expect to extract over its useful life. And so if you spend $100 million and this thing's gonna work for you for 10 years, divided over 10 years, and you're expected to make money on this asset, and so you're given this kind of write-off to kind of help offset that.
Yeah.
But there are rules that go into that. Like you can't write off everything. You can't depreciate everything.
Yeah.
Like your employees' salaries and things like that. Those are expenses, right? Like you can't write off if you own a grocery store, your clerk's salary. Like it's just an expense that you have to incur every year. Sports teams make it so that literally almost everything is a deductible expense, even their employee salaries.
Yeah.
And in this case, that would be the athlete. How do you feel about being able to write off all these player athlete salaries, which is their employees?
Yeah. So essentially how it works is the owner who is going to be purchasing the asset, which is a team. There's multiple assets within the team, right? So how it's structured is like they're purchasing the business, and the business gets to deduct like the salaries and all that stuff. So it's not saying the individual billionaire is deducting the salaries off of his own tax return. It's like the business income which gets added onto his income, and they purchase it at the sale price, which is typically higher. And what the US tax system is set up to do is it allows them to amortize those specific assets over a specific useful life. And in this case, a lot of them, just amortize a lot of their stuff within the first few years. Like Steve Ballmer, for example, nearly like majority of his income got like eliminated. I think it was $140 million of what he's used over like the last 4 or 5 years in terms of using those assets and amortizing them and reducing his income. So like the Clippers specifically, they had $700 million in losses from 2014 to 2018. From that vantage point, obviously Ballmer is going to use that to his advantage just because they're losing money. But on top of that, he gets to amortize even more, right? That's an additional thing that he gets to, kind of reduce his taxes by. So a lot of individuals such as ourselves, we can't really do that because we don't really have those type of assets. But when you say, for example, purchase like a property and or other like tangible asset, we do have those kind of specific vehicles available to us. Like you can take the depreciation on your car, you can take the depreciation on your house in certain areas and certain things. But I guess the US tax system set in a way where obviously ultimately favors the elites. And so basically the whole crux of this thing came back like in the 1940s is when they structured this whole low design of adding depreciation to this whole sports buying thing. So the guy's name was Bill Veeck, and I guess he had some connections with the IRS or something, like most billionaires might do. And basically he lobbied them in a way where, originally it was, your traditional business. It's like revenue minus expenses, that's your profit or loss, and you can kind of carry that over. But
Right.
he convinced them to add this whole depreciation side of things into this whole purchase play of these sports teams, and allowing them to buy each asset separately, and then consolidating it at the at the end. So it was essentially structuring deals, transferring assets, and each of these new assets now can be depreciated over time. And these are the things that these billionaires are taking advantage of. And Steve Ballmer is not the only one who's doing this. Like every single one of these billionaires are doing this. It's funny, like when they see like this whole tax advantage thing go away, they usually sell the team, right? And then so a new billionaire just kind of comes in and buys it at an extremely high price as well.
And we've noticed that within the last 10 years, like basketball teams especially have been crossing that $1 billion threshold, or $2 billion threshold, and things like that. And yeah, obviously, like Steve Ballmer is the most easiest one to use as an example. So like, just to put that into perspective, he bought the team for $2 billion, and he was essentially able to amortize up to $1.8 billion over the next. Like that's everything that you spent, right? Like, and you're able to utilize that. And yeah, to his point, he's not doing anything illegal. The tax system is set up that way. It was really interesting in this article we were looking up. They mentioned Paul Beeston, who was the president of the Toronto Blue Jays. He's actually president of the Major League Baseball team or league at various times. But once the IRS allowed this, his quote was, "Under GAAP principles, I can turn a $4 million profit into a $2 million loss, and I can get every national accounting firm to agree with me."
Yeah.
And I think that's such a damning statement. Like that's like a slap in the face to be like, I can do this and it's legal.
Yeah. And that's why when we talk about making money, that's why a lot of smart individuals get into business, or consulting per se.
Right.
Because you're your own owner, but there's so many tax advantages. So the classic example I can give you is like there's a lot of consultants. They'll make a lot of money, but they'll use like every way and form to deduct things. So what they actually report is not that high.
Right.
And you basically do not pay much in taxes. You basically carry, let's say the guy made $100K. Somehow, some way, he has $70,000 in expenses or whatever. He's paying taxes on $30K, right?
Right.
Which is like next year nothing. Like maybe he'll pay like $10K taxes or whatever, but he keeps $90K. So that's a significant amount. Whereas an employee, the average employee who's making $100K in Canada per se, you're gonna probably be taxed at like 30%, like around there, 30 to 35%, I would say. And so like now you're looking at maybe you're netting 70K, right?
Yeah.
70 to 65K is what you're netting.
Right.
Like it's a huge difference in terms of tax. When we think about like future and stuff like that, I think more people are trying to be more inclined towards the business for self kind of thing. Just because like people are starting to become aware like employment is just slavery. That's what I think it is, like, to be honest.
Yeah, there's that famous quote, right, where the salary is the bribe that you get to like give up your
dreams. That's Kevin O'Leary.
Yeah, I thought about it. I was like, it's a way to condition you too, right? Like every 2 weeks it's like, boom, here's some money, now shut up.
Yeah, it's basically establishing that comfort level where I can pay for my shit. I know I can do this, I know I can do that. Whereas like a business person has to continually sell, do all that kind of stuff. So there's no predictability in terms of your future and stuff like that. But I guess when you build a solid business model, like majority of your customers are likely to come. And so like eventually it takes time to build out a business, but in the long run, it's like way better. It's like not even better.
Yeah, and to the point of like how, obviously we approach this like, oh, the elites are awful, people are saving so much taxes, but it's like the system, yes, we don't have the capital per se at our level, but the system is set up for everyone this way, so we can theoretically get there or utilize these things to our advantage, right? And so to that point, one of the biggest like the people who kind of support these billionaires who have these perks to them, one of the points that they mentioned is obviously, like you said, when you run a business, you kind of take on the risks, right? So you as a business owner are taking on all the risks involved. And so obviously employees get that comfort of consistency and whatever. But the business owner has to take every heavy risk at every step. And so people will say, hey, well, he deserves, or like a business owner deserves these perks to kind of help them move their business along and kind of navigate whatever comes about. But we also see instances where it kind of it's skewed to how much help they actually get. So let's use the pandemic as an example, where a lot of businesses were given wage support from the government. We saw the case where the Los Angeles Lakers actually qualified for a small business loan of $2 million.
And I think it was because they're generating losses.
So, and we can kind of see, right? Like this scheme actually helped them utilize that. So when we look at the Los Angeles Lakers, it's like, you're worth what, over $2 billion. You're not a small business, but they also qualify for these things through these mechanisms that are just, math on paper. That's all they're doing to navigate the system.
Exactly. And so let me pose a question for you here. If you were in their position, what would you kind of do? Like, say you're Steve Ballmer, and now you have a choice of being charged 12% tax or say 30% tax.
We're gonna take the 12, right? And it's legal.
So that's what I'm saying. Like, but like at some point you might say like, well, let's just say like, if I were in the same position, I'd think like, hey, whatever, I don't need much more money. Who gives a shit? At that level, I think they're just going towards like, I need to be the next like level up kind of billionaire. Like, I'm number 10. I need to get to number 5 kind of shit. So it becomes a competition for those guys. But I guess like when we're talking about like, say, regular individuals, I think saving as much tax and avoiding much tax as you can is smart. It's the way to go. And maybe at those elite levels, it's not really as important because, goddamn, like, what are you gonna do with like $400 million anyways, bro?
Right. Like, yeah, exactly.
You can pay a bit more in taxes. They're gonna hurt your ass.
Yeah, and to your point, man, you're fostering greed, right? At that point, because it's like you can clearly afford to pay $10 million more in taxes.
Yeah,
and that would make such a huge difference for the municipality that you're in, right? Like. Or even just the city. Yeah. Dude, I hate to keep ragging on Steve Ballmer here, but obviously the Clippers got a new arena recently, or sorry, am I mixing this up? It might be the trading facility. But it was the Warriors. The Golden State Warriors got the new arena, the Chase Bank Arena, or the Chase Center now. When you look at the situations of that, now the city itself also gives subsidies to these companies who are building the arena out, because it's like they want you to build it there, and you're going to bring future business through tourism and travel and things like that. So it's like you have all these perks outside of the tax perks that you're already able to capitalize on. So what is another $10 million in taxes that would help the common man, right? The common person on the street. But the system is set up that way for these people to kind of to game it.
Yeah, it's capitalism, man.
Yeah, man. So ethically, you're saying we should pay more, but realistically, when you get to that level, I think people just kind of lose sight of that, and they're just like, I want to catch the next guy on that list.
Yeah, exactly.
So if I can save this money, fuck it.
Yeah, it's a human ego thing.
Exactly.
Politicians are bought by elites. They make all the policies, and they all favor them. It's never going to end. It's just, you got to get yourself out of that cycle.
Right.
And that's when you'll start seeing the advantages yourself. Like, oh, shit.
Yeah.
I don't have to pay fucking taxes. Yeah.
When we see the next team sale or next ownership change, pay attention to those financials is what we're saying. There's going to be a lot of details in there that is more revealing than we think.